Welcome to the deep dive. Today, we're really getting into the Gemini IPO. It looks like a masterclass in strategy, maybe a bit of a financial necessity too, and definitely, a big bet on crypto's future.
Indeed. And we'll be looking at how they entered the market, which was pretty unique. We need to dissect the financials, the
Yeah.
realities there, and really zoom in on their big pivot, the Gemini credit card.
Okay.
And, we should also challenge that common idea about crypto payments. It's really what people think. I want to give you the key insights, really, into how digital assets are evolving.
Right. Let's unpack that. So, Gemini's IPO, September 2025, they raised $425 million. Impressive, sure, but it was apparently, 20 times oversubscribed?
Yeah, massively oversubscribed.
So why the scarcity play? Why not take more?
Well, that's the fascinating part, isn't it? It was engineered. The Winklevoss twins kept over 94% of the voting power.
94%. Wow.
Exactly. So it wasn't just about the cash. It was about building momentum, making it feel exclusive, maybe, and crucially, keeping ironclad control over their long-term vision.
Makes sense.
The shares priced at $28, valuing them at $3.33 billion. And they got good support, both from retail, they set aside 30% for them, and the big institutions. NASDAQ even put in $50 million.
Okay, so strong backing. But does keeping that much control maybe risk, I don't know, slowing things down in such a fast market? Or is that kind of tight control exactly what you need for a bold vision?
It's definitely a trade-off.
And the stock, GEMI, it opened at $37.01, right? A big 32% jump. Closed the first day, still up 14% at $32. So initially the market liked it.
Yeah, the debut looked great. But beneath that shiny surface, the IPO felt like, a financial necessity. Looking at the first half of 2025, the numbers weren't pretty.
Oh.
They reported a net loss of $282.5 million, and that was on just $67.9 million in revenue.
Ouch. That's a huge loss on relatively small revenue compared to the year before.
A really sharp decline from the first half of 2024.
Right.
So yeah, significant financial pressure there.
Okay, so connecting the dots here. Gemini had to diversify, right? Trading fees were over 65% of their revenue? That's just too volatile.
Absolutely. Way too reliant on the whims of the trading market.
Which makes the Gemini credit card the core strategic pivot. It sounds like a classic move, Core business is shaky, time to innovate fast.
Exactly. And the card itself is designed to be really sticky. They offer pretty attractive rewards up to 4% back in crypto, like Bitcoin or Ethereum, on gas. 3% on dining, 2% on groceries. And it's instant. No annual fee, no exchange fees.
And it's a credit card, not debit, you mentioned.
Crucially, yes. That sets it apart from a lot of crypto rivals. And importantly, no complex staking. You don't have to lock up your own crypto to get these rewards. It just makes it way simpler for everyday people.
That seems huge for getting people on board. It changes crypto from something you actively buy to something you just sort of earn passively through spending you do anyway. Does that fundamentally shift how people see crypto? Lower the barrier?
I think it absolutely does. It lowers that psychological hurdle, It integrates crypto into daily life through MasterCard and WebBank, the issuer. You're not making a big decision to buy volatile Bitcoin. You're just getting a reward. It feels less like an investment risk, more like a perk.
Okay, but you mentioned earlier this idea that the card's data could push merchants to accept Bitcoin directly. You called that a strategic fiction. Why such a strong term?
Because, let's be realistic.
No.
Direct merchant adoption of Bitcoin faces massive hurdles. You've got the volatility, which is a killer for pricing and accounting.
Right.
Then there's the tax complexity. How do they even handle that? And just the operational headache of integrating a whole new payment system alongside fiat.
So the data Gemini gets from the card usage, it doesn't really help merchants overcome those fundamental problems.
Not really, no. It gives Gemini insights, sure, but it doesn't magically solve volatility or taxes for a local coffee shop. Ironically, the card actually reinforces the existing Visa MasterCard fiat system because that's how the rewards are earned, right? It doesn't disrupt it at the merchant checkout.
So if direct Bitcoin payments via merchants are maybe less likely, short term at least, where does the future lie for digital assets in actual payments, even for a company like Gemini?
It really points towards stablecoins. Things like the Gemini dollar, GUSD, pegged to the US dollar. They remove the volatility issue,
Okay.
and they can potentially integrate much more smoothly into the existing payment rails we already use. That seems like a much more practical path forward for actual day-to-day transactions.
Now let's talk regulation. It feels like things are thawing a bit, maybe, but there are still gaps, right? Like crypto rewards held with Gemini aren't FDIC insured like my bank savings.
Exactly. That's a key consumer protection difference.
Yeah.
Your cash in the bank has government backing up to a limit. Your crypto rewards generally don't.
So Gemini has always pushed this compliance-first image. Lots of investment in security, anti-money laundering, KYC. Is that just defense covering their bases? Or could that costly approach actually become their biggest advantage as regulators get tougher everywhere?
I think it could absolutely become a major competitive advantage. It's expensive upfront, no doubt, all that investment in security, AML, KYC protocols.
Yeah.
But it does more than just avoid fines. It builds trust. As regulations tighten globally, and they almost certainly will, being the company that already meets or exceeds those high standards, that makes Gemini look like a safe harbor, the reliable choice for both individuals and, importantly, institutions. It could be their moat.
So wrapping this up, this deep dive really shows the Gemini IPO wasn't just a cash grab. It funded a necessary pivot, centered on that credit card, trying to make crypto adoption seamless by earning it.
Yeah, but it also throws that stark reality into focus. Direct merchant adoption of volatile crypto like Bitcoin still faces huge fundamental roadblocks, which pushes the real action, at least for payments, towards stablecoins.
Right. So ultimately, Gemini's betting that being the compliant, trustworthy player combined with these sticky products, like the card, will lead them to profitability. It's a big bet. What stands out most to you from this whole story? And how do you see this fitting into the bigger picture of finance and digital assets meshing together?